I'm Fernando Torres, and I'm here to hopefully help you with your tax needs. And so, this is the first of many episodes to come. And one of the things that I like to do is I like to read the US tax code because it's written by lawyers and they don't always know how to write. They're not English majors, so you can find a lot of things that are incorrect. So when I read the tax code, I can always find things that will help me as the taxpayer. And so one thing that I was looking into was the business use of a home. And so that one is always one for interpretation and one that raises a red flag with the IRS. So I've written a book, and it is which one? Let's see. Let's see, which one is it? Oh, here it is. Jesus sojourned, but you shouldn't have to expense your home. So I briefly discuss in there, or I'm sorry, I do discuss in detail what is going on. So you are allowed to deduct your home. So I've come up with a kind of a workaround to be able to resolve the red flag area because if you look on Schedule C, you're going to see the uh, business use of a home line 30. This is for year 2022. And so there's a workaround if you're able to think of a solution. And so that's why I ran the book. But today I'm going to briefly talk about US tax code because I have to be able to defend my clients using the tax code. So I was able to manipulate, I printed it out in Word and manipulated it so I can fit it in 5 pages because it's always a lot of information. And so, as you can see, it is US Code 26, uh, Chapter 280A. And so it's the disallowance of certain expenses in connection with business use of a home, rentals, a vacation. And I love the first line because it is kind of the introduction to it. It basically states that the home allowance deduction is not available, it's not allowable to individuals or as corporations. But it gets more into detail on what is and what isn't allowed. The biggest thing is that the IRS really wants to make sure that you're not using your home for personal use. And so within this context, you're going to find that they kind of mess up on how they write it. Because one thing that you're going to see in there is that, let's see, it is C, C, I'm sorry, B. The IRS cannot disregard, I'll just read in full. Uh, shall not apply to any deduction allowable to the taxpayer without regard to his connection with his trade or business. So I think that's a key area because a business needs to have a location. So if you're not renting an actual commercial office, the IRS can't deny you any portion of your home. So they can, your defense is that you can prorate the prorate. So I didn't write this in my book. Maybe my ex updated book, will discuss it. So what that basically means is that from let's say 8 to 4, 8 to 5, whatever your business hours are, you're going to be able to deduct your home. So the way that it works is that you can do a proration. So the room, let's say it's 10 by 10 and 1,000 square feet. That's 10% of the home. And you have your total costs are $10,000. Now, $1,000 becomes a business expense. The simplified version, called a safe harbor, is 10 by 10 times $5. That's $500. So the $1,000 is greater than the $500. So I would be more aggressive and use the 10%, the $1,000. Um, if you end up using the room for personal use, they can't disregard the use of the business. So at the end of the day, let's just say you use because you're in there 1/3 of the time, or one half you work 10 hours a day, 12-hour days, but the rest of the time you use it for sleeping and you only sleep for 8 hours, you can say that 66% of the use is business. So really what happens is that they can fight you. They say 1/3 of the day is for business, so really $333. So the $500 simplified method would work. If you want to say that the room is only used for personal use for nighttime for bed, 8 hours, you sleep 8 hours, that's 1/3. So 66% becomes business. So $666 is greater than 500. So they can't disregard the what's the wording again? They shall not apply to any deduction allowable to taxpayer without regard to its connection with his trade or business. So that right there is part of your defense. And there's a few other things here and there, but I think that's the most important thing. They can't deny 100% of your claim. But that's why there's a simplified method. They came up with the calculation because of this. And so if you want to be aggressive, use $1,000. If you want to be conservative, use the $333, whatever you want to do. So there's other pieces. I don't want to bore you. I'll probably make a follow-up video, part 2. But this is the end of the first video, and I hope you got a lot out of this. And thank you so much. Bye.